Welcome back to the channel, guys. In this video, let's talk about the crypto market dip, liquidation cascades, and also smart contract platforms. If you enjoy the content today, make sure you subscribe to the channel and check out the pinned comment down below to join me over on Patreon. So unless you were living under a rock over this past weekend, since Friday, we've had a bit of a sell-off in the market. That may be a little bit of an understatement. Things have gone down quite considerably over the last couple of days, and we're seeing continued pressure towards the downside right now. So why has this happened and where do we go from here? Well, essentially you're seeing kind of funeral-like atmosphere over on crypto Twitter right now, a very good gauge for market sentiment. When that gets super bearish, you should typically flip the opposite way and become a bit more bullish. And I think we're pretty much there in terms of the sentiment levels being at all-time lows. If we just look at the prices here, Bitcoin are roughly 47,000 bucks. We're like 10K off where we were around Thursday or Friday early morning. Ethereum under 4K here, BNB around 540 bucks. Solana is sub $200 for the first time in a little while here. Terra pumped, dumped, $61 today. Polkadot 25, Avalanche 78. That's had a bit of a pullback from the previous all-time highs here. Crypto.com around 50 cents and Polygon around $1.76. So what we've seen is the fact there was hawkish comments from the Fed, Jerome Powell. By hawkish, we mean negative. You have people describing these things as hawkish comments or dovish comments. Just imagine which would you rather be in the room with, a dove or a hawk? Clearly the dove. So hawkish is kind of negative or bearish sentiment towards the market, where he started to talk about tapering and the potential for interest rates to go up. So if we just look at the S&P 500 as a bit of a gauge here, we've had a sustained sell-off. Over the last month, you can see it's been dipping pretty significantly. We had quite a few CEOs resign. You've seen the likes of Elon Musk selling his stock, and generally tech stocks are down quite a bit. So what we need to see is a bit of recovery from the S&P 500, as clearly both the crypto markets and the traditional equities markets here are now linked. You've got a lot of players in both boats here, and so when one turns down, of course the other's going to follow suit. And these are financial markets at the end of the day. People go risk off, money comes out of the system. So this is definitely a chart you want to keep an eye on and see if we have a nice bit of a recovery here. Clearly those comments from Jerome Powell went down like a lead balloon and the market's really tanked. So it'll be interesting to see if he has to come and stabilize the markets once again, potentially offer a bit more of a bullish narrative to get a recovery out of the stock markets, as clearly it's not favorable in political circles to see the stock market tank. They want strength. And so, of course, I think this potentially leads to more pumpage in terms of printer going burr in the future. So here's some analysis from Tech Dev. We've seen our first major Bitcoin structural deviation, failed swing high retest, and will likely close below the bull market support band, which is 51.6K. He does correct. I will note, however, that the cycle has respected the 20-week SMA like the last respected the 20-week. So we want to hold at 47K on a close. So this, he's showing the bull market support band and the number of times that it actually came and retested this, which is the 20-week here. But here in 2021, just move myself over a little bit, you can see the 50-week MA here is where we've actually been bouncing off on a few tests. So 1, 2, and now a third one here at around $47,000. So he's showing you that the structure of the market has changed from last time round back in 2017, and that we want to continue to see this area of support hold strong. And if we can do that, we have potentially our launch pad for this cycle. So things do change from cycle to cycle, and potentially this is the ground that we need to hold at around 47, 48K, pretty much where we are right now. So we want some stability over the coming week. Checking in here with Benjamin Cowen's latest video posted this morning. So he was going through the BTC Chart bull market support band update, and as you can see, we actually broke through the bull market support band, which typically precedes some more downside, so not a positive thing. But not to change the goalpost too much, Ben does here suggest that the crypto total market cap may now be the best indicator to utilize for the bull market support bands due to the fact Bitcoin has been losing dominance consistently over the months. So we know with the rise of Ethereum taking up more market share and the rise of other smart contract platforms, Bitcoin's dominance is waning. So if that is continuing to trend down, maybe we need to look at the more macro asset class here for future analysis. So this is something he hypothecates in this video. And as you can see from this, we have held the bull market support band for crypto total market cap. So a little bit of a silver lining to the cloud that looms right now. Over to this, Santiago Santos from Parafy Capital, absolute great guy to follow over on Twitter. And he says this: crypto market pendulum swings to extremes as emotions hijack rational thinking. If you've been here for a while and get overwhelmed by market swings, then you haven't learned much. Go back and scrutinize your process, your position sizing, your concentration, illiquidity, and time preference. So he's pretty much saying here, look, this is par for the course. We know we're in a very volatile asset class. And like we've seen previously, we're going to have huge swing highs and swing lows. You need to be prepared for both sides of the coin here. So if we look at the crypto fear and greed index, a reading of 16 right now. Last month, we were at 71. So if ever there's a chart to show you that being a contrarian is the most profitable thing to be, this is it. If you sold last month and things were up here, greedy, and we had Bitcoin like 69K, and then you come back this month and you can see we're in extreme fear, everything's down quite substantially, and you start buying, well, you'll be doing very well. So we're at a reading of 16, all the way back here in July. And June time, we had readings of 10. So this was the lowest we went, even though we dipped all the way down to around 29,000 US dollars for a Bitcoin. So we're nearing 10 and we're still at around 47,000 US dollars per Bitcoin right now. So this really does show you the extreme emotions in the market. So as Benjamin says here, it seems like more people are calling for a multi-year bear market now that Bitcoin is at 49K than when we were at 29K. Sometimes you need to zoom out. So this is all about having that perspective in the market and understanding how irrational the participants in the market are, and the participants are not going to change. And it does feel like this market is just set up to wreck as many people as possible. We all had high expectations that Q4 was going to be a major rally. We would have a huge December blow off top. Everyone was in the same boat on that kind of theory, and thus it did not play out, and it looks like it's going to play out in an opposing fashion here. So pretty interesting to take all of this in. So Sam Trabucco is from Alameda. This guy is a market maker, quant trader, and he does these kind of debriefs after we have big corrections in the market. Well worth giving a read to his previous editions as well. He did a post last week, November 30th, talking about market efficiency. So from that efficiency post, he talks about how the markets generally are recovering a lot quicker each time we get a new variant. So like the first time it happened, we had months of a downtrend. The second time it happened, it was a few weeks. And seemingly this is getting a quicker and quicker process. And eventually over time, the market will become efficient to the point that this just becomes noise and we're not affected. I think what's caught a lot of us off guard here is the fact that many of us are like, we know what happens after these new variants come out. We've seen it previously. We've watched this movie before. There will have to be stimulus if they start locking people down again. People are going to lose their jobs. And so the money printer will fire up and we're going to see an up-only environment once again. The majority of market participants are reacting to these feelings of fear and greed. And so we're still going to get these drawdowns. So maybe it's something to think about for the future, but let's just dive into this thread here. So starting here, all week since news of the Omicron variant got out, both the equities markets and the crypto markets have been up and down, or rather down and up, as various bad pieces of information about the variant tank the markets, and then they recover in the days or hours afterwards. A version of this happened on Friday. Equities ended up net down a bit. Yet again, although in his opinion, it wasn't obvious COVID-related impetus this time, general sentiment had been bad, and crypto followed suit yet again with a nice bit of a sell-off. So a few features of this move were important. The price of Bitcoin, for instance, was nearing a long-time local minimum. So sub 53K hadn't happened since early October. The same day it crossed 50K as well. So it was late Friday, US, early weekend in Asia, amongst the lowest liquidity times is when we had this breakdown. These line up for our favorite effect, liquidation cascades. And when you see those big downward red candles on the chart, you know that that is forced selling from liquidations. Tons of levered longs have been opened in the past month. Nothing special, just what's always happened in crypto. In fact, the insane leverage is lower than it used to be, but the effect was still substantial. And there we see Sam riding out the storm as the market maker there. Part of the reason it was still substantial was the low liquidity. On various exchanges, Bitcoin got to sub 30K for just a brief moment, and that was because of how little liquidity sits on the books during super off hours. The initial liquidations were the same size as usual. So the market timing having a big impact here. Some may say that this could be coordinated, but the bids that were getting market ordered into were thinner, causing more price impact and more liquidations since the prices got really low in many cases. So both these effects feed off one another. And all of this ended up meaning that open interest got really wiped out. That is OI. You might see this mentioned on Twitter, open interest. Much of this was from liquidations, even though, as Larry notes down here, some of the exchanges aren't fully reporting these anymore. So the suggestion is that the exchanges are being very liberal with what they tell us in terms of liquidation events. No real surprise. So this, from Larry, total open interest went down from 21.6 to 16.7 billion in about 30 minutes. This would mean that almost 5 billion of open interest just evaporated. This tends to be a better proxy for liquidations because exchanges now massively limiting liquidation data. We'll just look at the data in a second, but do bear in mind you need to take it with a pinch of salt these days. Another factor was that futures got to giant discounts to spot in some cases. Here's a snippet of Alameda's tool we use to track the type of data. This chiefly because people were forced to sell into low liquidity. Premium being negative 70 here. Crazy, crazy stuff. And firms like us who were short futures, which had previously been at positive premium, were able to close at a large profit. So Alameda made out like bandits, which isn't even to go into how awesome it was to buy deltas right when the selling liquidation stopped. But that's old news by now. The second a bunch of forced selling no one wants to do ends, it's pretty predictably good to get the other side for years now. So ultimately, while I do stand by my claims that the market has gotten more efficient over time and will continue to do so, the past day has demonstrated that it's certainly not efficient just yet. Circumstances can definitely line up to lead specific products way off. So he pretty much closes out here with, for now, though, I'll suck all this up and keep sacrificing a weekend here and there to take advantage of the inefficiencies in the market. Harder to find better trading than on a day like yesterday. So these guys would have been deep in the markets over this crash period and made a ton of money. So essentially, the market maker always wins. The trader typically loses. That is why there has to be a buyer for every sell and a seller for every buy order. Here are the liquidations. Crazy, crazy numbers here. So this is the 3rd of December. 2 billion of longs wiped, 500 million of shorts wiped. And this, as we've seen, is potentially factually incorrect information as exchanges don't want us to know the full picture. But still, we're seeing hundreds of millions and even billions of dollars being wiped out from people's accounts. So do bear in mind that if you are trading with leverage, the likelihood is you're going to get ruined at some point. If you think about it, you wouldn't play poker against a player who can also see your cards. This is like leverage exchanging on an exchange. They can see all your liquidation prices, and when things mount up to be at certain levels, it only takes them to nuke the market just a little bit and cause a bit of a cascade. This definitely happens in cryptocurrency. And further to this, other types of liquidations can occur if you are borrowing against your assets for loans. Be aware of your liquidation price and any margin call prices, and ensure that you do top up wherever that account may be to ensure that you are a good chunk away from getting liquidated. I know a lot of people have messaged me to say they've been liquidated recently, and looking through Twitter as well, we're seeing people getting liquidated on the big lunar dip, which rocketed back up straight away afterwards. Pretty painful stuff there. Seen quite a few pro traders actually coming out and sharing their losses over the weekend. And so this is going to happen across the board. Clearly, when you're having like 2 billion worth of liquidations taking place, clearly a lot of us may be affected. So just be mindful of this. Never trade with leverage, in my opinion. And if you're taking leverage against your assets, ensure you have plenty of wiggle room if the prices do tank 20, 30, 40%, etc. Use a loan to value ratio that gives you a lot of buffer. So this from Willclemente here. He's been posting some really good alpha recently. From a kid who's 19, like he's got a very good grasp on the markets already. So realizing more how the Bitcoin and crypto market is about liquidity, market makers will drive price to the max area of pain for leverage retail apes to get wiped. People like Trabuco, who we've just read his thread, will keep drinking your milkshake. They're always winning. If you're going to go higher, you need to create a period of disbelief, uncertainty at a minimum. And this is essentially where we are right now. Many participants in this market do believe we are now in a bear market, and we need this uncertainty, this FUD, this fear to feed the higher prices. You want people going short in order for the markets to go long. It sounds counterintuitive, but this is how the market makers drive prices and make loads of money. Will says here a great example of this was September 2020. We moved up initially 11 to 12K for Bitcoin and funding went insane, everyone leveraging long. Then we had a 20 to 25% correction because the liquidity was there to be taken. Then this created a period of mixed funding and disbelief, which allowed us to move higher in Q4. So we want to see something similar now. So a plethora of different factors here, variants of the disease going round, shaking markets. You're having quite a lot of people protesting against these things. Again, more political uncertainty, those kinds of things. Huge amounts of leverage being wiped. You've had the stock markets going down, hawkish comments from the Fed. And of course, you then factor in weekend liquidity being low, and you've got yourself a nice concoction for a liquidation cascade, which is what we have seen. And clearly investor sentiment now has been rocked. So I don't expect this to be a quick recovery here. May take some weeks, but in my personal opinion, the bull market is not over. We're just going to have to deal with the volatility like we have done previously. And here we go. Let's have some positive ending to this video here. Terra Analytics here on Terra Smart Stake. As you can see, the amount of Luna tokens being burned has been insane and continues to be insane. Yesterday, 2.1 million Luna burned. The previous day, 2 million, 1.7 million, and so on and so forth. And we're now seeing Luna jump up to third spot here on DeFi Llama for the most total value locked of smart contract platforms, just behind BNB, Binance, and then of course Ethereum at the top, but leapfrogging the likes of Solana and Avalanche recently. We've also got Polygon Matic moving up a space ahead of Phantom right now and closing in on Tron a little bit more. So where is the money going to flow in these smart contract platforms? I believe Luna is going to be a net beneficiary over the coming months with the ever-expanding ecosystem they have, and also Polygon Matic with the ZK narrative coming around. You can see that this is on the horizon. And this, just to fill in the blanks here, VCs in talks to invest 50 to 150 million in Polygon. So if this doesn't make you bullish on Polygon as the go-to scaling solution for ETH L2, I don't know what will. Sequoia Capital and Steadview Capital are looking to make investments through the purchase of Matic tokens. So this would probably be OTC, well, almost certainly OTC trades, but they want to scoop up tens of millions, if not hundreds of millions worth of these tokens. And as we know, Polygon is helping to take some of the strain off of ETH L1, and we're seeing sustained amounts of investment into this blockchain. So I think this is getting more and more recognition as time goes on, and people are becoming more comfortable with using Polygon instead of ETH as that low-cost go-to alternative. So I think this will continue and is a trend in the market right now. So if you're looking for smart contract platform plays, Terra Luna and Polygon Matic seem to be fairly good bets going forward. So I hope this episode was helpful. Maybe we've colored in some of the blanks for you here as to what's happened over this past weekend. Of course, it's never enjoyable to see your portfolio go down, but this is going to happen. Most people are up tremendously on their total crypto portfolio values. And of course, over time with the volatility, you're going to get these drawdown periods. So just suck it up. This is par for the course, and we will probably trend higher in a not too distant future. And if you do struggle with these kind of things in the volatility, maybe it's best to step away for a few weeks and wait for the market to sort itself back out. As ever, if you enjoyed the content, make sure you subscribe to the channel and check out the pinned comment down below, guys, and I'll see you again tomorrow. Goodbye.